Hello, everyone. Welcome to the Final Bar. Today, my guest is Dr. Alan Ellman from the Blue Collar Investor, going to talk through a potential options trade with us. Overall, looking at the markets, the real story, looking at movements, the S&P higher around 3720, finishing up about 0.5%. Bitcoin powering through that 20,000 level, continuing to push higher in a dramatic fashion. So when you think of bubbles and bubble-like characteristics, I'm seeing a lot of similarities in crypto versus where I've seen in previous parts of my career, but it's all about the trend, and the trend is positive for stocks, for a lot of risk on assets. We'll review all of those charts and more. Ladies and gentlemen, this is the Final Bar. Hello, everyone. Welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here in a rainy Redmond, Washington. Thanks for joining us every weekday after the close for the Final Bar here on StockCharts TV as we review the message of the markets. We focus on the trends, how they've evolved, and look for opportunities. A lot of the technical toolkit is driven on identifying breakouts, breakdowns, and what's happening. And it's hard to ignore the move that we've seen, the acceleration really to the upside on Bitcoin. We have a paper trading competition with the StockCharts TV team. So myself, along with the producers, graphic designers, everyone sort of participating. The one person who gained the most in the last 48 hours had GBTC, the Bitcoin Trust, in their fund, and has just jumped to the top of the leaderboard in dramatic fashion. So it really shows how those in an asset class with increased volatility can make extreme moves. So it's all about your risk assessment, your risk awareness, and how you're thinking about that, but also making sure you're identifying trends, breakouts, breakdowns across your investable universe. And hopefully what we're able to do on this show is identify those opportunities, things on the move, places where you should be focused a little more. Now, we have some wonderful guests on this show. I'm really excited to have Dr. Alan Ellman joining us in a little bit to share his thoughts today. As a reminder, we have our show tomorrow, and then that's it for live programming for the next couple of weeks. We're going to take the end of the year off for the holidays, but we are going to compensate for that, or maybe overcompensate with a ton of special programming for the last 2 weeks of the year. I've always thought of that end of the year period as a fantastic time to look back, think about your performance, mentally, physically in terms of your investment performance, but also mentally, how you're actually handling what you're trying to do as an investor. So we have three sets of content to help you try to navigate that year-end process. One, starting on next Monday, the 21st, is a series of videos called Reevaluating Your Process. I recorded a special on the 10 questions I asked myself at year-end. We have Gaddis Rose, Keith Fitzgerald, some really fantastic commentators talking about how they think about year-end and their performance. Then starting the next week on the 28th, we have a series of videos on sector rotation. So Julius de Kempner, founder of RRG Research, is going to talk about the sector rotation, events that have occurred during the year. And then we have a series of strategists who are going to focus on particular sectors, do a bit of a deep dive, and tell you what you should be aware of going into next year. And then finally, over all 2 weeks, we have 10 and 10 charts from 10 different strategists, their top technical themes for the year through charts, and previewing some of the content. It's really, really well done. And our StockCharts TV team has done a great job sort of getting it all together and organizing it for you. So I think you're going to appreciate it. And hopefully it encourages you to go through your own, helpful process of evaluating your performance, setting yourself up for success for 2021 and beyond. Let's get to our market recap. As I mentioned, stocks finishing higher, about 0.6% higher, with the S&P around 3722, 3723. A nice uptrend into the close, so overall finishing toward the highs of the day. The Nasdaq leading a little bit further to the upside. Mid caps and small caps accelerating even more. So small caps the best out of that group, up just over 1%. And so that idea of small cap leadership is one we focus on a lot. A number of my guests in recent weeks and really recent months have focused on that rotation from a mega cap led market to more of a small mid cap or SMID-cap led market. And we've certainly seen a bit of a mean reversion recently with some of the mega cap technology communication services names working. Today is a little back to that previous theme with small caps on the way higher. The VIX back down below 22 today. In terms of some other asset classes, very briefly, bonds finished a little weaker with 10-year yields back around 92 basis points on the 10-year. Commodities continued stronger. I think this is one of our 3 and 3 charts yesterday or the day before, looking at the GCC, which is the equal weighted commodity index. Here we're looking at the DBC, which finished toward the highs of the day. That strength in commodities is not a new theme. That's been evolving for quite a while. And those commodity indexes are really rotating higher. What's interesting today is you have gold and silver, the precious metals sort of rotating higher. We're going to look at the XAU in a little bit. And again, I'm in general a trend follower. I'm going to want to see things that are breaking out. What's interesting is things like gold stocks are coming off of a relatively weak level. And I'm wondering if this is a bit of a bounce to the upside going into year end. We'll look at those charts together. As I mentioned, Bitcoin certainly on fire, accelerating to the upside, coming off a little bit in the last couple hours, but still finishing up 6% higher than it was yesterday. Let's review a chart of the S&P 500. And again, as a trend follower, your number one question is to identify trends. Your second question is to determine how to follow those trends. Your third question to answer is, how do I anticipate trend reversals? And I think if you look at the chart of the S&P, by any definition, the market's in a solid uptrend. And whether you see it as a run out of the March lows, a consolidation phase, and a breakout, whether you see it as just a resistance level that we've eclipsed, whatever it is, whatever your metric is, we've broken out, we've retested it, and now continue to resolve to the upside, with the S&P making a new 52-week high again today. So overall, the trend remains positive. And in general, as a trend follower, I'm going to assume that the trend continues until proven otherwise. And that's why the S&P, again, seasonally, we're in a very strong part of the year. This sort of November to January period tends to be pretty strong. I think in January is where it's sort of a comeback to reality moment, and you see what sort of market we're going to have over the longer term. This is a lot of that year-end window dressing, finalizing of the portfolio before we get into the new year. But overall, tends to be flat to positive in general. And so I could see the market continuing higher, especially given the news that we have coming out. A potential stimulus could certainly be a boost. The fact that vaccines are just here in some small form certainly is an encouraging sign. And the news from the Fed this week, which certainly seems to be supportive of prices going higher. So overall, you're seeing a lot of risk on assets going up, and a lot of other things going up as well. And I think that's where you should focus on the trends, not just on what could be leading, but what actually is leading. Having said that, when we look back at the daily movements today, real estate number one, materials number two, then healthcare. So a bit of a surprise there. If you think, again, if you think the market's up, 0.6% as in a raging bull market, sectors I would not assume to be at the top of the list would be utilities and real estate. And in the last 2 days, I'm pretty sure those have been the two leading sectors, utilities yesterday and real estate today. So I always remind people, don't think about what should be working, focus on what actually is working. And if a chart's working, figure out why that is down the road, focus on the trends and following those. We've talked about energy, and I think what concerns me with some of the energy stocks and with things like the OSX and other things like ETFs related to oil companies, you have this bearish divergence of, the price going higher recently, but the momentum really coming out of that trade. They really accelerated out of the relatively weaker point. They accelerated to the upside. The relative performance has been good, but now sort of getting to that point where you get bearish divergences, meaning higher highs in price, but lower peaks in the RSI. And I think that's something to pay attention to. Energy, again, on the weaker side of the ledger yesterday and then today. We've talked about home builders before, really haven't touched on them a lot. You have some earnings coming out. I think it's worth looking at Lennar, Pulte Homes. These are some in the list of stocks making the biggest gains today. It may be worth paying attention to this one. With this, it reminds me a little bit of the chart of Amazon, to be honest, which is, a stock that had a really good run, a nice stretch of relative performance, and then it's sort of been a non-factor, sort of a consolidation phase. What concerned me on some of these home builder charts, it looks like sort of a head and shoulders type pattern with a peak in October, a lower peak in August, a lower peak here in November, and then you have this neckline down here. And again, as long as we stay above that line of support, it's okay. If you break that, that's where it's a bit of a concern. Now we're actually seeing a rotation back to the upside with Lennar in particular up 7.6%. Things you can look at related to that ETFs would be the ITB. and the XHB. Those are sort of the two most liquid home builder related ETFs. The XHB has a little more of the like home building retailers, things like Home Depot and home building like stocks. ITB is more of a pure play on the space. But you can see with both of them, this nice rotation to the upside. If you take a trend line using the previous highs, you can see the sort of break up to the out of that upper trend line. So with this, I think you're now looking at these resistance levels. You have this clear resistance in that 58 to 60 level. We're right back there. I think if and when we get above 60 on something like the ITB, I think you could buy into potential for further upside. That reminds me of some of the like e-commerce names. I'm trying to think of one that's just like maybe Shopify. If it continues on and you get a breakout above the resistance, that's what would really validate increased potential for further upside. At this point, it looks like a group home builders sort of approaching previous resistance. At that point, I'm more skeptical of further upside. A breakout, if you see a breakout, acceleration to the upside, a sign that the resistance is not going to hold and that we're able to power through to new highs, implying sort of new buying or increased buying power or an exhaustion of sellers or however you want to describe it. That's what tends to be more of an actionable idea for me. That is our market recap for today. Again, a lot of movements. Overall, the trend that I'm seeing is positive, and you're seeing stocks like e-commerce names breaking to new highs, which overall is fairly encouraging going into year end. We need to take a quick commercial break. Back with my guest, Dr. Ellman. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. We so appreciate you joining us every weekday after the close for our show. It's been so much fun this year to go along this journey with you, bring on some fantastic guests, and look at the markets together. We are here to help you answer questions and navigate these markets, especially as you run into challenges and questions related to market activity, to sentiment, psychology, technical indicators. Whatever it is related to a chart, we're more than happy to help. Shoot us an email at thefinalbar@stockcharts.com with any questions. Also on Twitter, just tag us in a comment at FinalBarSCTV. Finally, on our YouTube channel, just put a comment below the video that you're watching. We'll do another mailbag segment at the end of this week on Friday's show, and we would love to answer one of your questions on the air. I want to welcome on my guest, Dr. Alan Ellman. Alan's the president of the Blue Collar Investor. Alan, it's a pleasure to welcome you to the show for the first time. Good to meet you.
Hi, Dave. Glad to be here.
So we appreciate you talking through a name for us. I mentioned just before the break about e-commerce stocks. I highlighted Shopify, which making a new 52-week high. You're highlighting another one sort of in that space, Etsy. Walk us through what you're seeing on the chart.
Yes. Well, my go-to strategy, or one of them, is covered call writing, and that's where you first buy a stock and then sell an option against that stock, agreeing to sell your shares at a price that we determine by a date that we determine. Now, I use technical analysis for both legs of the trade, both for stock selection and option selection. So on this chart, Dave, you see that the 4 technical parameters that I've been using now for more than 20 years successfully as it relates to option selling. So let's start with number 1 on the chart, which is the moving averages. Now, if I were looking at a stock specifically for purchasing for a long-term buy and hold portfolio, I would use 50 and 200-day simple moving averages. But since we have 1-month contract obligations, I need to see that trend line moving as quickly as possible. Therefore, I use exponential moving averages, which put the more recent prices weighted more heavily. So I use a 20-day EMA, which is that blue line, and a 100-day EMA, which is that red line. Now, 20 days simulates a typical number of days in a 1-month option contract, and a 100-day gives me a longer-term perspective. What we'd like to see is an uptrending moving average. We'd like to see the shorter-term 20-day EMA higher than the longer-term 100-day EMA, which we do have here. And we'd also like to see it uptrending. So overall, we have a very bullish moving average indicator. Now, moving down to number 2, we have the MACD histogram, which is both a trend and momentum indicator. We like to see those blue bars above 0 and if possible, ascending as well, which we do have on the right side of the screenshot. So we also have a bullish MACD histogram indicator. Now moving down to number 3, we have the stochastic oscillator, which is another momentum indicator. We like to see that ascending as well. You could see at the beginning of November, it broke through the 20th percentile, which is a bullish indicator. And then it started ascending from there. Now, currently it's above 80, which a lot consider that overbought, but we could actually see that overbought for weeks and months. And you could see that the 80th percentile was actually tested a couple of weeks ago and then bounced back up and has been ascending ever since. So we also have a bullish stochastic oscillator. And finally, number 4, we confirm with volume. We like to make sure the volume isn't drying out, which would represent negative volume divergence. And we want volume also to confirm the other indicators. And here we see volume holding up and actually coming up a bit the last week or so. So overall, we have a bullish price chart. And that means from a technical perspective, Etsy would be eligible for option selling. Now, if we go to the next chart, we could see that not only do we use it for stock selection, but we can also use it for option selection. Now, on the left side of the screenshot here, I highlighted 2 strike prices that we could sell after we buy the stock. The 190 out of the money or higher than current market value strike price, and the 175 in the money lower than current market value of the current strike price. So you take a look at the bid column and you could see the premiums that we would generate. Let's start with the out of the money, more bullish position, which has a premium of $8.40. Now, if we generated $840 per contract by selling one option on Etsy because the price chart was so bullish, that would represent on the right side, you could see a return of 4.6% in the yellow cell at the bottom, in the bottom row. That's 840 divided by 182.21, which is the current market of Etsy when market closed yesterday when I created these charts. Now, if you take a look at the brown cell right next to it, you could see that in addition to that 4.6%, we also have an opportunity for an additional 4.3% upside potential if Etsy moves from current market value of 182.21 up to that 190 strike price. That gives us a potential 1-month return of 8.9%. That would be a bullish approach to covered call writing. Now, Dave, let's say some of the technical parameters were mixed. Let's say MACD histogram was slightly bearish, or the stochastic oscillator started to show a little bit of a bearish signal. Then we may want the defensive protection of an in-the-money strike. Back to the left side now, Etsy in the brown cell, we're going to look at that 175 strike, which had a bid price of $15.35. Now, we cannot count that entire $15.35 as profit. Why? Because we're going to be losing $7.21 on the sale of the stock. We bought it 182.21 and we agree to sell for 175. So that 721 has to be deducted from the 1535 premium. But the good news is the calculator will do that for us. So Dave, for your members that want to get a free copy of the basic Ellman calculator, just go to my website, thebluecollarinvestor.com, look for the free resources link, and you can download the calculator for free. And what it will do is we'll deduct that 721 from the 1535 and let you know that your ROE, or return on option, is 4.7%, which is almost exactly the same as the out of the money 190 strike right below that, which was the 4.6. However, if you take a look at the upside potential on that top row on the spreadsheet, you'll see 0%, because we're agreeing to sell our shares for a lower price than current market value. So we cannot take advantage of upside appreciation when we sell the in-the-money strike. But remember, we're dealing now, hypothetically, with a mixed technical chart, not a bullish one like we currently have. Now, the key to the in-the-money strike is on the spreadsheet to the right in that purple cell, downside protection, 4.0%. That is not the break-even point. What that means is we are guaranteed a 4.7% 1-month return as long as share value doesn't decline by more than 4% by expiration, or stated differently, does not decline from 182.21 to below the 175 strike. So that would be a defensive approach to covered call writing if we had a mixed technical chart. And Dave, if I could say one final thing regarding these charts. If you take a look at the break-even column where that red arrow is, the second red arrow on the right side of the screenshot there, you will see that the break-even price point for the 190 more aggressive position is 173.81, whereas for the more defensive position, 175 strike, is 166.86. And that's why an in-the-money strike represents a defensive position, because it'll lower your break-even more than the out-of-the-money strike will. And when you have a mixed technical chart, that's something you may want to have on your side. And that relates to the intrinsic value component, in this case, 721 of the premium that in-the-money strikes offer.
Ellen, we have to move on. That was so helpful. And I've heard so many horror stories of people attempting to manage an options trade with not really having the tools that they need to figure it out. I feel like I hope people are asking experts like you to make more sense of it. Dr. Alan Ellman from the Blue Collar Investor, thanks so much for coming on the show today.
Thanks, Dave.
Dr. Alan Ellman. Alan's the president of the Blue Collar Investor, coming to us from Florida. It's interesting, you know what? Again, I'm not an options expert, and I've always enjoyed and valued talking with people like Alan who are immersed in the options market, because even if you're not trading options, having an understanding of how they're thinking about volatility and upside and downside potential, or just managing risk versus reward and potential for profit, I think there's a lot to be gained just from understanding that world a little better. So really appreciate his walking through a covered call trade. We need to move on to our next segment called Compare and Contrast. What we love to do occasionally is just sort of relate a couple different things to each other, similar securities that you could be looking at, and think about what relates them to each other. I want to start with this chart. I actually wrote an article earlier today on e-commerce stocks. I was asked about e-commerce stocks going into next year and thinking about them. And as I was writing, I thought it would be an interesting example to share with you today. You know, when you look at the year-to-date performance of the e-commerce space, and again, this is, you know, essentially online retailing, and it is in some ways companies on a pure, you know, online e-commerce stage, but also companies like PayPal and others, Shopify, that are empowering traditional brick and mortar stores to navigate the, you know, electronic commerce market a little more effectively, or transitioning their business during a challenging period. If you look here to date, you can see that the S&P up about 17%. As I took the snapshot earlier today, you can see that there are a number of e-commerce ETFs. iBuy, ONLN is an online one, Clicks. These tickers are fantastic, by the way. eBiz, those are the four most common ones that I've tended to look at. You can see I put Amazon on here as well. So they are up anywhere from 74% to 125% year to date. Again, while the S&P is up about 17%. This is why this space has certainly gotten a lot of attention, because the relative strength has been dramatically positive. What's interesting to me, though, is not just the fact that the performance is so good as you take the snapshot now. It actually was impressive going into the bottom. So if you look at February, these you know, ETFs for the most part were all outperforming the S&P at the top, right? As the market's topping out the third week in February, these e-commerce ETFs were already outperforming. So the fact that they're doing so well is not just companies rotating to the cloud and rotating to online shopping, you know, this year as in you know, addressing coronavirus challenges. This is a process that had already been starting. It sort of reminds me of something like Zoom. You know, I had used Zoom before February, but boy, I use it a lot now. I use it a lot more, and certainly it's more integrated into my day-to-day work. I think the same thing could be said for some of these e-commerce names, right? They had been doing well for quite a while. This is not a new phenomenon. The acceleration to the upside has certainly been fueled. So why this dispersion between, you know, 125% and 74% year to date, and they're all e-commerce ETFs? So it all goes to the construction of the ETF. And this is where I always say with ETFs, I would always do your due diligence, understand what securities you're getting exposure to, what sort of concentration they have, what sort of weighting they have on different names. And essentially, and I am totally oversimplifying, but Amazon is up around 75% year to date. The ETFs that have a bigger weight in Amazon are sort of closer down to Amazon's return profile. iBuy is more of an equal weighted version. It has, it's more into things like, what is it? A bunch of other names. Shopify was one of them. Stitch Fix is one that comes to mind. A bunch of these that are, rotating higher. So it's more spread, not just in Amazon, it's in a bunch of other things. eBiz, I want to say 20-25% of the ETF is just Amazon. So when Amazon has been doing well, an ETF with a big Amazon weighting is certainly going to do better. But when it's a lot of other names that are starting to emerge, and when small caps are starting to outperform, some of these smaller names are coming out and really driving the performance higher. So I would encourage you, as you're thinking of these sorts of ETFs and you're thinking of the performance, look at what actual weightings there are, and particularly in the e-commerce space, all of these overall are setting up very well. If you look at the average chart, we had Shopify up here a little earlier, but if I look at something like iBuy, they all sort of had these nice return profiles, an acceleration into a peak, usually August, or most of them early September. You see the relative strength sort of tapered off, but really have accelerated to the upside now. So two final things I would leave you with. With any of these ETFs, I'd be looking at the RSI. What they're doing is getting near to this extreme overbought condition, an RSI above 80. You can see that's happened a couple times, and usually what that signifies is at least one more push higher before a meaningful top is sort of the general way I would think of it. So iBuy accelerating to the upside, the RSI getting near 80. I would certainly be watching that to see if it becomes extremely overbought, at which point I would expect at least a bit of a pullback before a continued move to the upside. The last thing I would leave you with is to pay attention to charts like Amazon, because this working would certainly help that entire space do better. What you see with Amazon is this coil pattern, the acceleration to the September peak, lower highs, higher lows. We're really at the midpoint of the range. This whole range is revolving around 3,200, sort of right in the middle. At some point, we break above that trend line. We have not quite seen it yet, but that's what I would look for here as one early signal that Amazon is starting to work. Also breaking above that November swing high would be a good one. And finally, there are plenty of names in there: PayPal, Shopify, Etsy, all accelerating to the upside. Overall, I think trends are in place until proven otherwise, and I'm seeing a lot of strength with those e-commerce names. That was compare and contrast, helping you just think about, when you think of e-commerce or home builders or China, there are usually a number of different ways you can play it. Make sure you focus on what exposure you're getting and what return profile you're looking for. We need to wrap this show and go to the 3 and 3 charts in 3 minutes. Here we go. Chart number one is the XAU, the gold and silver index. So we talked about gold stocks, and again, overall, I am very interested in uptrends. I'm looking for stocks that have made higher highs and higher lows. And what interests me on the chart of the XAU is the fact that we've now, in the short term, established a higher low when it hit a low around 135. That's above the late November low, and now breaking to a new swing high today with a gap up above that high from the end of the first week in December. So overall, in this tactical time frame, starting to trade higher. So overall, as long as we remain above 135, that short-term uptrend is positive. We're just breaking above a trend line using those previous highs. So I think it's an interesting chart to watch going into year end. Chart number two is the S&P 500 with the percent of stocks above their moving averages. My guest yesterday, Tony Dwyer, was talking about this. He said basically the 10-week moving averages, the number of stocks above their 10-week, and making, in a pullback going into the beginning of next year, looking at that for an actionable entry point. And I certainly think there's a lot of value there. I'm showing the percent of stocks above their 50-day within the S&P 500. Here we're doing the 200-day. And again, he and I were talking about the similarities now versus what the market did out of the 2009 low. Go back on this chart to the last 15 years, and you'll see what happened when it was about 0% of the S&P above their 200-day to about 90+%. And there are a lot of similarities. The last period that looks very similar to what we're seeing right now using that breadth indicator. Finally, it's the chart of Amazon. Again, the e-commerce space has certainly been resilient. You've seen some fantastic breakouts on stocks like Shopify. And the question is, what's next going into next year? I think Amazon is an interesting chart to watch. This is sort of the elephant in the room with some of those ETFs. It's a huge weight in a lot of them, and certainly a proxy a lot would use for e-commerce in general. Breaking above trendline resistance, breaking above a swing high, making a higher low, and holding above it. All of those would be signal that Amazon is starting to work more going into the new year. Right now, Amazon is 44th percentile out of 100 when we think about some of those, the scooter large cap universe. So you'd like to see a breakout, a follow through to the upside that would encourage me of thinking about Amazon as a good play going into next year. Folks, that's our show for today. Thank you so much for joining us every weekday for the Final Bar. Special thanks to my guest, Dr. Alan Ellman from the Blue Collar Investor, walking us through an options trade. I wish we could do that more because it's really helpful to understand the nuts and bolts of how that works. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a good night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.